I absolutely positively believe that the US dollar will lose substantial purchasing power in the next 10 years. The period 1982 to 2022 was probably the most benign epoch in human history, particularly for American investors. The US dollar had hegemony. I have to say, I hope with regards to gold I'm wrong. I own gold for insurance purposes. I don't own gold because I think it might trade from 24 to 27. I own gold because I'm afraid it's going to go to $8,000 or $9,000 or $10,000. And I really want to be wrong.
And you own gold hoping you'll never have to sell it.
Exactly. And
Yeah.
think about an insurance asset,
Yeah.
life insurance. That means somebody died, okay? This is not a good outcome. But if it happens, you want to get paid.
Countries like India, China, Brazil, Malaysia, and Bolivia, among others, are seeking to set up trade channels using currencies other than the dollar. With so much of the world economy reshaping itself in the post-pandemic landscape, is the reserve status of the US dollar going to be the next domino to fall? BRICS and other developing countries are ramping up their gold purchases while decreasing US dollar holdings, reports the World Gold Council. The US dollar will lose substantial purchasing power in the next 10 years, warns RickRule, founder and CEO of Rule Investment Media. But he believes the dollar will remain the world's reserve currency for the rest of his life. He quotes Doug Casey, who famously said, "The US dollar is the worst currency in the world, with the sole exception of every other currency." Around 60% of the world's foreign exchange reserves and international debt is denominated in dollars, with the euro a distant second at 20%, according to data compiled by the ECB. U.S. authorities have so far dismissed the notion that the greenback's global primacy, born with the Bretton Woods Agreement of 1944, was about to end. Throughout 2022 and 2023, BRICS led global gold buying and continued this trend in 2024. Notably, China are leading by example, shedding U.S. Treasury bonds and amassing significant gold reserves. In 2024 alone, China divested $53.3 billion in U.S. Treasury bonds, prioritizing gold acquisitions. While other BRICS nations follow suit on a smaller scale, China's actions dominate the shift away from U.S. treasuries. RickRule highlights the liquidity and transparency of the U.S. Treasury market, describing it as unparalleled. He believes the U.S. dollar's dominance is due to the lack of competition despite its gradual decline. The rule also emphasized the importance of owning gold to hedge against future uncertainties. I own gold because I'm afraid it's going to go to $8,000, $9,000, or even $10,000. I really want to be wrong. And you own gold, hoping you'll never have to sell it, he concludes. Before we jump into more content, consider subscribing and enabling notifications to stay updated with our latest uploads.
So I think the dollar will be the world's reserve currency for the rest of my life. For the record, I'm a very healthy 71-year-old. Because look at the competitors. Doug Casey famously said the US dollar is the worst currency in the world with the sole exception of every other currency. I don't think that we're going to get through this easily, but I do believe that a society that is as clever as ours, with the distribution of intelligence as broadly spread as ours, will do well. I also believe that there is increasingly a globalization of opportunity and skill. My hope is that a rise in living standards in places like Malawi and Brazil and Nigeria and Indonesia is as profound as the increase in living standards in China was. And I hope, too, that that globalization of opportunity will make everyone, including Americans, richer. Now, that may be a naive hope. As I say, I have observed that over time, our individual creativity has financed our collective stupidity. If I'm wrong, the outcome is truly ugly. I think the euro has been a slow motion failure, and I think the failure of the euro will continue to escalate. Again, Doug Casey says the US dollar is an I owe you nothing. The euro is a who owes you nothing, and the BRICS is a nobody owes you anything. Think about the constituents to that. Non-convertible currencies, countries that don't trust us but trust each other less, a marriage of convenience, not a marriage of love. Imagine, as an example, a currency that's nobody's obligation, that everybody takes the credit for, nobody takes the blame for. Imagine that the constituents have no reserve liability to it. Now imagine that you're the Chinese and you run up the US dollar equivalent of $1 trillion, say, trade surplus with Russia.
Right.
There's only so much vodka you can import. What do you do with the balance? What will happen is if they even settle bilaterally, which is to say they settle in rubles and yuan, ultimately they will convert one or the other of those into something they can spend, which is a US dollar. The US dollar, for all its fault, is the only liquid, transparent currency in the world. The US Treasury market, for all its fault, is extremely liquid and extremely transparent, and there is no other financial instrument in the world that comes close to it. I absolutely positively believe that the US dollar will lose substantial purchasing power in the next 10 years. I don't think it'll lose as much purchasing power as the yen does. I don't think it'll lose as much purchasing power as the British pound does. I don't think it'll lose as much purchasing power as the euro. But I think it will continue to lose purchasing power, which is to say, again, quoting Doug Casey, the prettiest mare at the slaughterhouse.
And this is why, is it fair for me to say, you believe in gold?
That is why I believe in gold.
The US dollar faced significant pressure following the release of consumer price index data, compounded by Japan's intervention in the foreign exchange market, which supported the Japanese yen. This suggests to me a reluctance among market participants to see a sharp decline in the US dollar, despite encouraging data. Yellow metal continues to keep an eye on all-time highs, even as the US consumer shows some resilience in making more purchases than expected last month. The gold market is largely ignoring the better-than-expected economic data as it continues to attract technical bullish momentum near its all-time highs. Looking at recent economic conditions, RickRule draws a parallel to the 1970s, noting that by 1980, everyone expected the worst possible outcomes, which was when things started to improve. He believes we have been conditioned to expect future economic conditions to mirror the recent past, causing us to overlook historical lessons. Rule likens gold to an insurance asset, where the best outcome is not needing it, but it provides protection if things go wrong. Let's now turn our attention to the video again.
I think it has to do with 40 years of conditioning. The period 1982 to 2022 was probably the most benign epoch in human history, particularly for American investors. The US dollar had hegemony. We had continuing rate cuts. It was a wonderful set of circumstances. Anything that went wrong in our country, we could print it away, people would buy it. So we exported our difficulties to other places. I think that ended in 2022. It takes me back again to the decade of the 70s. In 1967, inflation was present. People noticed it. They had this thing called whip inflation now, which they didn't do. But it took the period 1967 to 1972 for Americans to understand the compound perniciousness of inflation. They had been schooled in 20 good years since the end of World War II to expect that things got better and better and better. While they were expecting things to get better, the price of a gallon of gas went from 20 cents to $1. It took them 5 years to understand the ravages of inflation on their savings and on their paychecks. But when they came to understand it in 1972, they understood it in earnest. My suspicion is that we are going to experience the same delayed reaction for the same reason. We are conditioned to look at the economy, to look at markets, by the period 1982 to 2022, which was pretty damn good.
Right.
The consequence of that is that the writing that we see on the wall doesn't scare us as much as it otherwise would. During the decade of the 70s, by 1980, everybody expected the world's worst possible outcomes, which is, of course, when things started turning good. And I think that's the situation. I think that we have been conditioned to expect things in the future that we've experienced in the immediate past. And that has inured us to the lessons of history. The Nifty 50, the great big American growth companies, were the Nvidias of the 1960s. And people were inclined to believe in American hegemony. They were inclined to believe in American technology. They were inclined to believe that things went better and better and better. They had the hubris, as you quoted, to fight the war in Vietnam, which of course they lost, and the war on poverty, which they lost too. This isn't to suggest that we're going to lose big time, but we're going to win a lot less aggressively. By the way, Daniela, I have to say, I hope with regards to gold I'm wrong, I own gold for insurance purposes. I don't own gold because I think it might trade from 24 to 27. I own gold because I'm afraid it's going to go to $8,000 or $9,000 or $10,000. And I really want to be wrong.
And you own gold hoping you'll never have to sell it.
Exactly. And
Yeah.
think about an insurance asset,
Yeah.
life insurance. I mean, somebody died, okay? This is not a good outcome. But if it happens, you want to get paid.
As BRICS countries strengthen their gold reserves and reduce dependency on US dollars, the global economic landscape faces significant shifts. This move could enhance local currencies and economies within developing nations while challenging the supremacy of the US dollar in global trade dynamics. What lies ahead for the US dollar and gold? We want to hear from you. Feel free to leave your thoughts in the comments, give a thumbs up if you liked what you saw, and subscribe to stay connected with our ongoing exploration.